So, the big news in the algo trading world this week is the implosion of the Quantum Queen Expert Advisor. And this is always very unfortunate to see, but it is something which can happen with grid bots, particularly if not the correct equity stop loss and safety features are in place. So what exactly am I talking about? The Quantum Queen, which is no longer here, used to be probably the best selling expert advisor on the MQL5 marketplace. And it was literally in the number one spot for months and months and months. And it was extremely popular. Tons of users were using it. And it actually got so popular that many brokers started to ban it because it was creating toxic flow for the brokerages as well. This was probably one of the world's most widely used expert advisors. And this week, essentially, it blew up. Many accounts essentially went to zero because the grid opened up many levels, and this caused various accounts to run out of margin. And some of them actually did have equity stop losses in place, but pretty much every single bot that had an equity stop loss in place would have blown just because the drawdown went above 50%, and most people would usually have an equity stop loss there. I am aware of a few accounts which went down to 70% of margin and then recovered, but that's certainly not a great situation to be in because I would think that most people would probably pull their account or pull their capital far before that. So it's kind of an unfortunate thing. I know people who lost a fair amount of money with this. Fortunately, not many of my clients were using it, so they should still largely be good. Some of them were, but I think many of them had controlled their risk rather well. But in the broader algo trading community, many people were burned. So realistically, what happened? Well, Quantum Queen was a gold trading grid, and running grids on gold can be an extremely dangerous proposition. So as you guys know, any sort of grid martingale, the strategy behind it is you average into losers. So let's say you take an initial buy, and instead of price going up, it just decides to go down. You would essentially keep opening positions, more and more positions at increasingly large lot sizes, with the hope that the last position would essentially cover the prior ones. I think with Quantum Queen, it wasn't necessarily a martingale per se, but it was still a grid where it would just open many positions, depending on the settings used. And all of those positions would essentially aim to capture all the losses and offset it with some additional winners. But regardless, it buys into a losing position. And this can be quite dangerous because if the position really runs against you, you can get into a lot of trouble. And specifically on gold is an extremely volatile asset. So if you're running a grid strategy and you do so on the Aussie dollar, New Zealand dollar, you do so on Euro CHF, generally speaking, these assets tend to mean revert. You don't have these enormous spikes. But this week, gold, which has been in a downtrend for an extended period of time, started to actually see some signs of life. And this was largely because the Fed was being a bit more optimistic on their ability to cut rates, as well as the fact that NFP came in soft. So the jobs data came in softer than expected, which is all kind of pointing to perhaps we either won't have a rate hike or perhaps we might even have a rate cut. So the market is getting a bit more optimistic on the interest rate situation. Gold is a non-yielding asset, benefits from this and generally goes up, right? So essentially all of that kind of caused this massive, sharp, volatile reversal. And we saw just over the past few days, we had like a 5% spike in price of gold. And if you were in a short grid and all of a sudden you have this massive spike to the upside, that can be very no bueno for your grid and essentially cause it to blow. If you're trading something which is mean reverting in nature, then you don't have these enormous spikes usually or changes in the trend of the asset. But here, as we can see, gold is not a mean reverting asset. It trends heavily, and when it goes down, it can go down by a lot, right? So trying to run a grid on this particular asset without extremely robust risk controls can be a recipe for disaster. So essentially what happened? In blue, many people were unhappy, and then in classic MQL5 developer style, immediately another brand new bot came out, which pretty much does the same thing, but all the signals were wiped, and lo and behold, it moves to the top of the MQL5 marketplace. So the main thing which I find a bit odd here is people don't seem to learn their lesson. Like 370 people bought this new bot immediately after its predecessor blew a bunch of accounts. So it's your money, right? Like do whatever you want. But at the same time, I hope that people could kind of see that these things can be pretty dangerous. You need to just control your risk. So granted, lots of people use grids intelligently. They understand how to separate the risk, how to put it in small accounts and to generally protect themselves. But I would be exceptionally careful. So this was kind of another example that even if you're using a world-class bot or a good grid bot, they can still blow. Another great example was the Waka Waka a few years ago, blew pretty heavily. A lot of a few other companies, I won't name the companies, but they had a lot of high net worth Americans in grid bots too. And then the yen unwinding a few years back destroyed a lot of their accounts. People lost hundreds and hundreds of thousands of dollars. So really, at least from my opinion, if you're using any meaningful amount of money, don't use grids. Unless you're being incredibly, incredibly careful. Grids are fine if you want to have some fun with $5,000 or a few $1,000s in an account and just see what happens. But if you are really trading with meaningful capital, this happens. It's guaranteed to happen eventually, right? And it keeps happening again and again and again with all of these really, really popular bots. And I've seen enough of them by now. If you're in the space for years, you kind of see that this always happens, right? And people, especially I talk to folks all the time who've maybe been trading with bots for 3 months and they think they've discovered nirvana and they're just printing cash nonstop and they're shooting for incredibly aggressive returns. And they don't realize that there's always this black swan catastrophic risk. And if you don't kind of understand that, you're going to be in for a really nasty surprise eventually. So all of this to say, people are grown-ups. They can do whatever they think is best for themselves. But this is big news in the algo trading space. It keeps happening with every major grid bot. So just guys, just be really, really careful, because if you average into losers in a volatile asset, you can always have these black swan events or even weak NFP, big news spike, yen unwinding, Australia and New Zealand currencies being devalued. This happens surprisingly often, and something can look beautiful for 6 months until there's just some exogenous macro shock. So be careful, don't blow your accounts, and if you have any comments or additional insights, please leave them below so that other people in the community can learn from this. Guys, hope you enjoyed the video. I'll see you in the next one.